Welcome. Where are we? What's going on with the old markets today? A bit of short action on the Nasdaq for a bit, creeping back up. YM off on its own little run. Gold chugging slightly, crude up a little bit, Bitcoin down. Apparently Elon Musk is looking to be deported by Donald Trump. Part of the bill's through. ISM was a little bit lower, I think, this morning. This morning Eastern time. You know what? There's a lot going on. It feels like we are at the tipping point of where the market's going to make a decision one way or another. First day of the quarter. Do we have a bit of a sell-off? Do we have some profit taking? Do we have a lot of funds who are still underweight the market trying to get back in? Time will tell. No matter what you trade, how you trade, just stick to your routine, your regime, your lane, and focus on that. It's so easy to get caught up in all the nonsense that's going on out there. Okay, well, here we are, new quarter, 1st of July. Welcome back. We haven't been away, but it's a new quarter. It feels like a fresh start. And I think sometimes like you wipe the slate clean, new month, new quarter. Okay, what do I want to achieve this quarter? Where do I want to take my trade in? What do I want to be thinking at the end of this quarter as we go into Q4? And people always laugh at me for this, but I've always thought I like to get momentum. You know, if I feel like I've slipped off the throttle, or I feel like I've deviated from the plan a little bit in Q2, Q3 brings you back so that you can carry the momentum on for Q4 to get a solid end to the year. I know we're only halfway through the year, talking about year enders, anything can happen, right? But I think sometimes just making a course correction at the end of the quarter, where you're headed, you need to dial in your discipline. Are you trying to trade more size? Are you trying to improve your strategy? All this type of stuff. It's a meaningless point in the calendar, right? A quarter, but I think it's a time to take stock and think about where you are with your trading. Okay, so July, good, interesting webinar series for you. Let me look at my notes here. We've got today, obviously talking about Map Your Market with AI, which will start in about 90 seconds. Then next week, we're going to talk about the multi-playbook method. So that's really how to combine kind of trending, mean reversion, maybe scalping into one playbook or multiple playbooks into one system, as opposed to being so leveraged on momentum or so leveraged on trending type environment. So it's kind of helping smooth the equity curve a little bit, if you like. But more on that obviously next week. Then we're talking about 2 setups that I want to share with you for navigating the open, for trading the open, actual setups that are working at the moment. I say working, who knows how long they'll go for, but I think it's something that's interesting for you, and I'll just dig into those specifically. Confirmation, talking about when it's too late, what confirmation I think really means, and how you can balance that the scale between waiting too late and getting a late entry versus too early. And then what I call the terrain target trigger framework, which is what I like, what I was posted note here, says exactly that. Terrain target trigger. What sort of environment are we in? Was my target for the trade? What's the trigger for the trade? Anyway, more on that another time. Just wanted to whet your appetite for what we've got going on for this month. So thank you for joining me. And if you would like a copy of the recording, I think that's sorted. I think that's fixed. That should go out and you should get a copy of this recording. If you don't, you can always contact me, and I will, Armand will send you a copy of the recording. More on that in a moment. Okay, today, let's get started, ladies and gentlemen. I'll introduce myself in a moment, but you are at the webinar that is talking about how to map your market with AI. Now, a quote here from Brett Steenbarger. Obviously, this is not that relevant to mapping your market with AI, but it all makes sense. Like, the psychology ties in with the strategy. If you have more confidence in your strategy, which we're going to help you build today, we'll talk about some of the intricacies of that in a moment. It just helps with your discipline. It all does tie in. I know that we often talk about, and we isolate strategy, and we isolate discipline, we isolate psychology, we isolate confidence, and all those other things. And absolutely we should, because I'm a big believer that we focus our energy and resources, that's when we can move the needle forward. So if your strategy needs work, your discipline, your mindset, and then that brings the whole kind of the rising tide lifts all ships. But ultimately they're all kind of embedded, right? They all interlink. And so if you have belief in your strategy, confidence in your strategy, it's far easier to stick to the rules and all that other good stuff. So Brett Steenbarger, by the way, he's been on my podcast. I know I talked about his loads, but I will keep talking about it because he was a little hero of mine when I started trading in 2001. I used to read his blog. Markets Talk, they display recurring patterns of behavior. If you listen carefully, they teach you their logic. Okay, so let me first, if I may, just remind you, ladies and gents, before we get started, that, of course, spread betting, CFDs, anything you trade with margin, with leverage, it is, it's a double-edged sword, right? Works very, very well. On the short side this morning, Nasdaq crumbled, and you had a full clip margin on, you're doing very, very nicely. And that's why we kind of trade, and that's why I trade on leverage. Other way around, if you're caught long, risk happens fast, and human nature is we tend to freeze. If you're a developing trader, this is something you've got to watch out for: freezing, making sure you've got your stop loss in, this type of stuff. So I don't want to labor the point, but please just understand the risks involved in trading. It is something that you have to go in with your eyes wide open, understand the product you're trading, understand all the ins and outs before you risk your hard-earned capital. So there's that. Let's move on. Okay, so quick reminder. I got decent. Introduce myself. I know many of you have been here before multiple times. Thank you for joining me again. You're brand spanking new. Very brief introduction. My name is Mark Holstead. I started trading in 2001. I run a daily email called Traders Mastermind, podcast 2. What else? Listen, I don't stand here and say I know everything, especially not when it comes to AI. I'm learning just like you, but I'm in the trenches. I'm in the thick of it. I'm discovering things. Others bring to me ideas and thoughts as well. So I collect everything from my experience and from others, and I share it with you guys. That's where I come from. I don't come here and say, listen to me, I know everything. You should absolutely do everything I say. Absolutely not. That's not the way it works. And I think that, I've always grown and developed as a trader by doing that and taking little bits and deciding what works for me, what doesn't. You don't have to agree with everyone. Someone says, you take a little bit and say, that's interesting. You take a seed of an idea, and then you kind of drive forward with it yourself. And especially today when we're talking about AI, I'm not the expert, but I'll share with you some things that I believe are working. And also remember that, stuff like ChatGPT, which we're going to talk about today, it can get stuff wrong. I've had times where it's got stuff blatantly wrong, and you've had to go, hang on a second, you ain't quite there yet. We're not quite in the position where it's going to be taking over the world just yet. I mean, gosh, last time I talked about this was not long ago. I did a presentation. First time I talked about this in Pepperstone, presentation for Pepperstone, should I say, down in London, and we're talking about developing strategies and stuff. It's come on loads since then. It's way more accurate, way more efficient, and it just does what you ask it, but you still have to double check. So as always, do your analysis, research, homework, due diligence, all the other good stuff before you dig into anything to do with trading. Okay, so let's get started. Here's the premise. Now, let me do some backdrop a little bit. In fact, no, let me not bore you too much with history and all this stuff of my journey. Let me just tell you kind of the short version. So I think that being ahead of the curve, or at least on it, the AI journey, the ChatGPT, Gemini, whatever you want to use, I use ChatGPT. Does it matter which one? I don't think so. But really making it and forcing it to be part of your life, especially in trading, is going to help you loads. And today we're going to cover like how to enhance your trading with AI. Now, there's not some holy grail system. There's not some AI signals or any of that nonsense. This is, okay, how you trade as a trader, what you focus on, the market you trade on, the time frame you trade on, the style you are, and using AI to enhance that. Before, you would have to hire a researcher. I remember in my must have been a decade in, I put an advert out to try to hire an assistant to help me with my trading and help me do some analysis and stuff. And that was an absolute disaster. It didn't work out. But the point is now you can have a pretty decent assistant, an analyst, a researcher, risk manager, with ChatGPT. Now, in my daily email, I cover a lot of kind of ad hoc uses. I use my phone a lot on voice mode with AI to talk through the journals and that type of stuff. I'm not going to cover that today, but there's so many other use cases other than this. But what we're trying to do here now, and what I'm trying to hopefully share with you over the next 45 minutes or so, some Q&A at the end, is to really, as you evolve as a trader and as we kind of go on this journey together as human beings with attached to AI, I'm not quite ready for Neuralink in my brain yet. Maybe you are, but that's not for me just yet. But using it as a tool to really support your trading and being able to kind of come up with ideas, come up with thoughts, the discretionary trader observing price and saying, hang on a second, how can I have some data and some logic to back up my decisions? More on that in a moment, but that's kind of what we're trying to achieve. We're not trying to replace ourselves. We're trying to support our decisions with logic, data, probabilities that we've used simple tools like ChatGPT to assist us with that. And so, as we evolve in traders, I think, and this is just a personal belief, that you're going to be left behind if you don't start using it to some degree in your trading. And I get feedback all the time from traders who say, hey, I do this with it, I do that with it. I've been uploading my trades and looking at my journal, and it's helped me to extract certain events in my trading. I've used this on voice mode, which is what I like to do. And I've asked it brutal questions like, hey, knowing what you know about me, show me my blind spots in trading. We'll cover all that sort of stuff at a later date for sure. But the point is that no one, I think, has used it properly and had a bad experience. Everyone's dabbled with it and gone, oh God, it's giving me useless information. Time to change. If you're kind of new to it or you're kind of been dragging your feet, I really encourage you to get it. This is where it's going. Like it or not, this is what's going to happen. I remember many years ago when I was trading on the London Stock Exchange, not actually on it, but trading London Stock Exchange shares, we shifted from CQ to sets. CQ was a market maker type model, and we shifted to what's called sets. And sets is where you could put your own orders in. How long ago is this? A long time ago, right? 20 odd years plus. And everyone thought it was the end. Like, oh my God, just like the guys in the pit who went to electronic. Oh, it's the end, the era's gone. It's not, we just got to embrace it. And luckily for us, this enhances us as traders. We're electronic traders. We used to sit in front of the screen reading price. So this is going to enhance it. It's not replacing it. It's going to enhance it. So let's focus on how we can use it and listen, I'm a big fan of using my resources wisely, my capital and my time, and specifically my time. We only get a certain amount of hours in a day. I don't want to be sitting there running through reams and reams of data to come up with something. Now, I will do if I feel it's got a payoff. Oh, absolutely. But the beautiful thing with ChatGPT, and we're going to show you in a moment, is that we can experiment, we can play around, we can come up with ideas, and we can very quickly validate them before we dig into them. And that is such an amazing breakthrough. It now means that you can, really support your trading with some probabilities, some logic, and however you trade, find a way for, this kind of research to support you. Okay, so we're trying to add another dimension to our trading. We want to know the market we trade like the back of our hand, right? This is the edge. As a discretionary trader, you trading maybe 1, 2, 3, maybe a handful of markets. I am always an advocate of not going too crazy and watching too much stuff. But let's say you trade NASDAQ. Let's say you trade dollar yen. Let's say you trade cable. Let's say you trade gold, crude, whatever you like to trade. You should know that market inside and out. What's the typical Asian session range? What's the typical US session range? The opening range? How often does it take out the high, the low? All this type of stuff, which we'll dig into, but that's where the juice comes. And that's where you can then combine probabilities. It's got a high probability of doing X with your price action, your discretionary element. Hey, I've just seen a momentum ignition trigger to the upside. Now you feel comfortable to take that long. Probability is on your side because you've done the work to get that data, and you've got the discretionary element, the kind of trigger, if you like, the setup that you see on the chart, whatever time frame you trade on. Now you're combining two powerful elements to really kind of break through with your trading. We want to guess. We don't want to guess. We don't want to be guessing. We want to be kind of measuring. Many traders don't have a benchmark for what a normal type of day is. Maybe you've like this. You come into a day, go, is this abnormal? Feels like we're really ripping to the upside here or downside. Is it going to be a trend day? And you don't have statistics to back it up. It's just feel, which is okay. I'm a big discretionary trader. I understand judgment, nuance, all this stuff. We don't want to replace ourselves with the machine, but at the same time, being able to support ourselves with data is going to be very, very useful, and we can do it very, very easily now. Okay, so, and also leaving edge undiscovered. I've got a final slide which I added to this because I really wanted to share that with you. So here's our process. We want to get a system that we're constantly using ChatGPT in this example, anything you want, but any chatbot, using AI to find out what a normal scenario is, and then frame our trade expectations with a normal, and AI kind of helps us do that. So what we're going to do today is we're going to work out how we can kind of map the market that you trade. We're going to use NASDAQ as an example because it's something that's in play and something I'm trading a lot at the moment. How we're going to use ChatGPT to kind of run through it. I'll show you step by step. How we kind of then layer that into your existing trading, and also how to generate some new strategy ideas. Okay, so let's start super simple. And by the way, I'm using I think there's two versions. It's the first, I think it's the plus version of ChatGPT. It's only $20 a month or something. I think the top one's $250 but that was the $20 a month one. So if you're using ChatGPT, I recommend that you do invest in it. It's not a lot of money, and I think it unlocks a different level of stuff and a different level of analysis and data and stuff. I don't know what the upper level is, whether you get that much more. I think it's for more the research type stuff, but I find the kind of plus version, whatever it is, perfectly adequate. Okay, so most people are familiar with ATR, right? Average true range, or the typical daily range. And let's start really simple for now. And let's say, okay, we need to find out what the most common daily range is for our market. Now, you could use the ATR, and the ATR is running at whatever it is, 400 stuff for the 24-hour session on the NASDAQ. But obviously, average is lagging. Average is skewed by super high or super low data points, so is one better word. And we kind of want to just start out very simple. This is kind of just bedding you in, just easing you in gently, into what we want to do and what we expect the daily range to be. So just a reminder how to do this, and I know we've talked about this before, so I don't want to cover old ground, but I also recognize there's some new traders here, so I want to share, roughly, basically how to do this. You get your ChatGPT open, many of you are familiar with that. Now, if you're in TradingView, and by the way, once you've done this, the beautiful thing now I find is you can work from this data. You can have that window, that chatbot window, what do they call it now? Conversation. You have that conversation there, go back to it and constantly be asking questions. Now, you might want to update the data every week or so it's got fresh data. But the beautiful thing about it now is once it's ingested the data, the open, high, low, close data, you then got it, and you can then interrogate it every day, whatever. It's just such a lovely place to be. Okay, so download the data. What you do, okay, well, let's go through it quickly. You open up your chart on the time frame that you want, 5 minute, 15 minute, daily, 1 minute, whatever it is. Now with TradingView, and it goes back a certain amount, so you have to balance the time frame granularity or the lower time frame with how much data you want. 15 minutes is probably good for most people, and we're talking about opening range and stuff like that today, and also a strategy from that 15-minute range, which I'll share with you as well. So I've chosen 15 minutes for this example. Now, you just click export chart data. You bring a 15-minute chart of the NASDAQ, you export chart data, and then you literally drag and drop it into ChatGPT, and you say, hey, this is, and you can talk to it, with the microphone, which is what I do quite often, which is why some of this text doesn't make a lot of sense. And you can just say, this is daily data for NASDAQ, and this is what I want you to do with it. So I then said to it, fine, I want you to give me the minimum range we've had over the last 30 trading days, the maximum range we've had, the mean, and the mode. And now the mode is the one I'm most interested in. Now, first of all, it ends up to get a mode. The mode, by the way, is the most common, going back to year 7 maths. You've got the mode. What's this little rhyme, wasn't there? It's some little rhyme. Anyway, the mode is the most common, so I think that's a little bit more effective as a trader than the mean, and with ATR is normally the mean. So for the mode, we want the most common, but we have to round that up, because one day you might have 252, you might have 255, you might have 257. They're all different points, and so the mode's not going to be accurate. So we want to round this up. So first of all, we go, okay, let's round this up and give us a kind of typical expected move of the day. Now we have the mode, which then comes out to be a $200 range. So that's telling us of the last 30 days, when we round this up to, I think it was the nearest 15 we did, that tells us the last 30 trading days, that's a typical daily range, right? The mean goes at 343. Now I can see how the difference, right? Because we've come off that ATR, because we've kind of come down and we've kind of had a lot of high volatile, a lot of large wide range days, and now we've kind of had a volatility crush. We just go, okay, what's the most common and what's the mean? Now, What we're trying to do here, and again, this is a very simple start, but just kind of getting used to what we're trying to do. We're trying to frame the day, because as a day trader or a swing trader, you want to say to yourself, hey, where's the high? Where's the low likely to be? If I think the low is in for the day, where do I think the range is going to be? And we kind of want to frame the day. And the reason we want to do this, right, is so that when we're layering in our trading strategies, when we're saying, hey, I think that's a breakout, I think that's momentum ignition, I think that's a fade, we want to say, well, what's normal? When we've chucked this data into ChatGPT, it said to us, hey, mode is $200 range, 343 is the mean. Be careful, because even though the mean is running at 343 here, we've had a lot of $200 days. Okay, fine. So what was the minimum? What was the maximum, etc.? So now what we do is in our daily chart, we say, right, I'm expecting if that's the high and there's the low, I'm saying, okay, $200 range takes us to here, 343 takes us to here. If that is the low for the day, up here is a $200 range, up here is a $343 range. Range so far is 159. So in sort of shorthand, what's that telling me? It tells me that the start of this trading day, there's more to be done. There's way more to be done. And so I don't, okay, so let's put it into kind of perspective of a day, sort of in the trenches as we're about to take a trade. If I saw price roll over and start to double bottom here, I go, okay, hang on a second. The range is nowhere near done. Now, that may be the low of the day, and we may shoot to the upside, but I add other layers in and go, well, we're below the VWAP, we're kind of the first day of the month, whatever it might be. Hang on a second. If I'm taking that, the only reason I take that is if I believed it was the low of the day. Otherwise, it's got to be a short A to B trade, because there is still a range expansion to happen. And I don't know if it's going to expand to the downside or to the upside. I don't know that yet. Versus if we'd had that bottoming pattern down here, and in fact, I think we had it, it was about 22,600, so it was around here, a little bit early, but let's say it was to 22,560, you start to see that pattern. You already know, hang on a second, this is the mean, right? So it's rough. But if they're starting to bottom there, the normal expected range is around this. So if you start to then layer in some discretion, some judgment, some reversal patterns and signals that at those extremes, at the range levels that you think the market's going to do, you're like, hang on a second, this may well be the low of the day. We may well rotate back to VWAP. We may well rotate back to the open. And so this helps you not chase stuff that you think is running too high or too low. Like that market was free falling earlier. If it started getting to the $350 range, you're probably not going to chase it without a pullback, because you've already decided, or you've already seen that logically it won't go much further. Well, that's not correct. Logically, the normal expectation is we don't go much further. Now we know what the maximum is because we had that data, so it could do. But that's when you as a trader have to lay in your judgment. That's why you can't just use this as a systematic strategy. You just say to yourself, hang on a second, this is the expected range. I'm framing each day, and I'm then layering my idea to take breakouts or reversion trades based on that. So it's very similar to kind of the way we would use ATR, but we're going one step further by asking for the mode with ChatGPT. Okay, that's the first kind of framework. Now let's talk about something a little bit more juicy, a little bit more interesting. So many of you guys trade the opening range breakout. And by the way, this applies if you're trading currencies. So let's say you're trading Asian session breakout. So you're trading a London session breakout. Let's say you're trading crude slightly earlier, opening breakout or initial balance breakout, or any of this type of stuff. The example I'm using here is the opening 15-minute range. And when I say the open, I'm talking about the regular trading hour session on the NASDAQ. So that's 2:30 UK time, 9:30 Eastern time. It's that first 15 minutes when the bell goes, all the options are open, all the ETF is swinging. We're in full clip, right? So this is why this is interesting is there's two things. And I'll kind of let me get ahead of myself slightly here, but I'll add more context to what we're doing. So I want to know, hey, what's the typical 15-minute range? Why? Because if I'm trading in the opening session in that active early 15 minutes, I want to know if I'm getting too caught up in chasing stuff that's really got momentum. I want to know also, more importantly, is there a correlation between the 15-minute range and the daily range? Now, this is where it gets juicy. The ATR stuff, all this other stuff, fine, simple. But now we can start to do statistical analysis with ChatGPT, which is way above my pay grade. I've got no idea how to do statistical analysis, but I want to know the information. I want ChatGPT to tell me yes or no when there's a wide opening 15-minute range, there's likely to be a larger daily range. I just wanted to do that, do all the number crunching, be geeky and nerdy, and tell me as a simple trader, actually, there's a correlation there, pal. When we have a stretch 15-minute range, later on in the day, look for extensions. Look for it to go beyond that mean. Look for it to kind of break out an afternoon breakout and hold that damn thing, because we've had a little clue that we might have an early trend day. Because I don't know about you, but the earlier we can identify a trend day, the better we can either stay out of trouble and stop failing the damn thing or join it. And it's always after the fact you go, oh, it's a trend day. Well, fine, but let's see if we can add some color to that. And by the way, it's just one thing you can look at, the opening range. You can look at the overnight range, you can look at the gap, all this type of stuff. But for now, there's so much we can cover, but I'm trying to cover, some things that hopefully get you juiced up and go and explore this stuff yourself. Like I say, the barrier to doing this is so low now. So opening range dynamics. If you're a scalper, opening range breakout trader, day trader, whatever it might be, I want to map 15 minute, 30, 60. I've done all this. I've mapped all of this out, but I'm just including the 15 minute here today. We download, we've already done our 15-minute data, and we say, hey, ChatGPT. And again, you can just use voice mode for this. You can just click the little microphone button. You don't have to use the advanced voice mode. Just say, hey, ChatGPT, this is my 15-minute range data. I'm looking at the opening open from 2:30 to 2:45. Can you tell me what was the minimum, the maximum, and most common, right? Because now this gives us context from the bell. It basically says to us, hang on a second, what's the minimum we expect, that 15-minute candle? What's the maximum we've had it? You can say last 30 days, 60, 90, whatever you want to do. And what's the mode? What's the most likely? So why does that help us? Well, it helps us because we can say, if you are, let's say you see the opening bell, let's say you see price run on, it pulls, it bull flags. Now you might be like, that's a perfect bull flag, I want to pull the trigger. And the range has only done 30 points. You might be like, hang on a second, I know the most likely, the most typical historical opening range is 75 points or 70 points, whatever it might be. Okay, I can take that bull flag because there's meat in the move. Now, if you see the price rip up and not pull back and starts to bull flag and it's done 75 points already, you might be like, hang on a second, that might not break out as much as I want it to, because everything else I take into the mix, and context, of course, matters. There's no catalyst, we haven't really had a gap. It's not this, it's not that. Okay, do I really want to be expecting us to do something outside of the normal, outside of expected? So if I take that bull flag, there's probably a quick A to B trade, if that, and maybe I want a bigger unwinding. So it helps you frame in your mind, not getting caught in stuff and chasing stuff. So I asked for the min, the max, the mode, the mean. Now, when it comes to the mode, we touched on this in a moment ago, but the mode is the most frequently occurring. Okay, so you've got data, but the issue we have is that we have, you have to round the data off, because you might have an opening range of 71, 72, 73, 74, 72.5. They're all different, right? Even though they're 70, give or take, 75 would round up, but you get the point. They're all pretty much the same. So ask ChatGPT and say to it, hey, do you know what? What's the best mode to use for this? What's the best rounding? Because I want to round to a number so that I can get the most likely occurrence over historically. And ChatGPT came up and said, use a rounding of 15 points. It gives us a clean mode, balances noise versus insight, and aligns with how real traders think in terms of 15, 30-point brackets. Great. So it tells me if I average all the opening ranges out to the nearest 15, what's the most likely, i.e. the mode, 75 points. So now I know for the NASDAQ, over the last 30 days, the most frequently occurring opening range, 15-minute opening range, was 75 points. So what do I do with that? I can then use that as a framework to either trade with, or, as we'll get to in a moment, I can use that even more as a signal to what might happen after that. And by the way, yesterday's 15-minute opening range was 81 points. So it's about the level you want. So this is a great example. If you were selling this breakout here, you might be like, hang on a second, this breakout here, sorry, I've got to be careful. I've got to be really careful because we've only done a little bit of action here. I don't want to get caught out being chopped up or being too greedy looking for more movement. All right. So let's go back to let's add another layer of complexity into this. And let's say to ourselves, and this screenshot will make sense in a moment, go back to the initial question. I was interested in the opening range. I've got that anyway, fine, but just go through the process. But what I'm more interested in, stuff that I can't do, I don't have the knowledge to do this on Excel. I could research it. I'm sure I could work out how to do it. But I want to very, very quickly ask ChatGPT and say to it, yo, ChatGPT, does the first 15-minute range have any correlation to the daily range? So in my brain, I'm saying, if you have a big 15-minute range, does that mean we're likely to have a wider than normal daily range? And you can see where I'm going with this. And I want data. I got an instinct, right? I'm a trader. I've got an instinct. I kind of roughly know this. You don't sit in front of the screens for 20 plus years and not have an idea. But now I can kind of back it up a little bit. I never used to be able to do before, and I wouldn't bother going and do the stats with it because I kind of know. But now I can actually, ChatGPT can do the heavy lifting for me, and I can say, yeah, you know what, ChatGPT, just tell me, is there a correlation between a small 15-minute range and a small daily range, wide 15-minute range, wide daily range? Because as a trader, regardless of what I'm doing in the first 15 minutes, if I get a setup later on in the day and maybe it's coming to, we've had it coming to the end, coming to the kind of range expectations, and I go, hang on a second though, but I've noted down this morning the first 15-minute range was quite wide. I can extend that target. I can probably take the afternoon breakout, look for a little bit more, and also maybe stop me from fading that kind of push the highs in the afternoon because actually the day's different. Something's changed, and it makes sense logically, right? I would always think kind of logically of this and go, it makes sense. Institutions are pushing, all the orders through the marketplace early on because they've got a lot to do. So the likelihood is we're in a reprice type scenario, big opening 15-minute range, big imbalance at the open, institutions piling money in. And I would add, if we're in the direction of that move, then maybe you want to look for extended move. Maybe you want to look for a close at highs. Maybe if you're a swing trader, you want to look for a day two play. And so you start to see these little clues can guide you to how you structure your trade. Because without this, you just be looking at the afternoon breakout or the late flag or the power hour drive and go, it's a power hour drive. It's a late flag. It's an afternoon breakout. And you take it on its own merit. But now you can layer in some logic with it and some historical probabilities that say, hang on a second, I've got some reason to take this, or I've got a reason to size up on this. So I ran this through, and it basically came out and said there's a correlation of 0.669. And me being me, I go, what does this correlation of 6.669 mean? ChatGPT. That's a beautiful thing, right? You can ask those stupid questions and get decent answers out. And so it basically said this. It said, listen, in trader terms, when the opening candle is big, the rest of the day tends to be big too. So in other words, it's not a perfect positive relationship, but it's actually strong. It's significant, as it says there, it's significant enough to trade around. So in other words, if I have a wide opening range in the first 15 minutes, the entire day's range is likely to be high. Now, you could do this if you traded Forex, Asian session range, for example. If you were trading NASDAQ, if you're trading Dow, if you're trading S&P, the overnight session, anything that you like to trade. This is not me saying you do this. It's me saying, hang on a second, look what you can do. You can now start to add these layers up, and so you can position accordingly and use your discretion and judgment to position. So now I know, which I kind of knew already, but I now got some data to back this up, that if I have a very narrow 15-minute range, don't go looking for breakouts. In fact, probably stick on the mean reversion tack. If you see a breakout to highs that fails, get short, look for it to roll back to VWAP. Chances are, with that narrow 15-minute range, we ain't going nowhere. Are there exceptions to the rule? Yeah, of course there are, but you get the point, right? And this was the stats it gave me. It kind of gave me this little scatter graph and said, hey, out of all these days, going back 187 days of data, there's a strong positive correlation between the first 15-minute range and the total daily range. Brilliant. That's all I need to know. I'm a trader. I don't care about the intricacies of how it works. But ChatGPT can do this now. And you can just ask it these simple questions in simple language and get simple answers, because we're traders. Now, some of you might be mathematicians, statisticians, and all that other good stuff, but maybe you're not. But they don't need to be. You can ask in simple language, test these ideas. Talking about testing observations, here's some good ones. I thought to myself, you know what? I've seen quite often my longs work very, very well after the European close, and I think there's a bid that comes into the market after the European close. Again, I'm talking about the Nasdaq. So I just said, "Hey, ChatGPT, I think there's some strength after the European close, which is 4:30 UK time. So can you just show me an interest how strong that 15-minute period is after the European close? And give me the last 20 trading days, because I don't know if this has been going on forever, but we'll explore more later." And this is literally what I said to it. And it goes, "Yeah, no problem, brother. I will give you the answers. Here are the results." And so now I know I've observed it, and maybe you have this as well. You see stuff in the markets, you see things, you don't know whether it's something you can actually trade, but now you can just double check it very, very quickly and simply. And it says, yeah, you know what? Look, average move is 8 points, median is 6, maximum 61, minimum went down minus 20 points. Okay, 14 out of 20 days closed up, 6 out of 20 days closed down. 20 trading days. All right, that's interesting. And so maybe it's not a massive mechanical edge on its own, but what it does mean is if I see my trigger, if you see your trigger at say 4:30, you see a engulfing bar, classical reversal trigger, it's strong, it's at lows, you might say, yeah, actually, ChatGPT has told me that over the last 20 days, 30 days, 45 days, 60 days, this has historically, which things can change in this market regime, that's been a profitable trade to take. Great. I'm now a quant and a discretionary trader in one. I take the best bits of the quant guys and the best bits of the discretionary trader and create this hybrid bionic trader. And I said, hey, George, give me some numbers here, ChatGPT. Give me some easy figures to kind of just work out in my brain. If we're doing £10 a point long on the Nasdaq, over 30 days, how would this make if you went long at 4:30 and closed it at 4:45? 45 days, 60 days. Just show me the data. Perfect for this kind of thing to show you guys. And it gave you this. Now, is this a system or strategy that you want to just take because it's 4:30? No, that's not my type of thing. Maybe it is for you, but it's not my type of thing. But in my brain now, and maybe you see this, that when you see your setups, your triggers occurring, you might say, hang on a second, I know that this historically has been the right thing to do. We haven't changed regime much. We're still in the same near highs, blah, 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 blah. I like it. It just adds an extra layer of edge, and you can obviously interrogate it as much as you like from here. But then you've got to be a little bit careful you don't start going down rabbit holes, because you start saying to things like, okay, what is actually the strongest time period? I know we've been in a kind of bit of a bull run and stuff, but okay, give me some interesting stats here. Over the last, say, 60 days, what's been the strongest time period? And you can ask it in the natural language, which is why it's so good. I can just, because it's got the data already, it goes squirreling away and it says, you know what, 3 to 3:30 is very strong, and it gives you the data. And now I happen to have a tool to test this in TradingView that I pump in and go, because I never trust ChatGPT. It's getting better. But now you go, hang on a second, let me pump it in. I kind of back tested it, and actually, sure enough, there you go. There was the information. You'd have been up a decent amount if you'd have done exactly that. Bought at 3 o'clock, sold at 3:30. Now, as I say, I'm not here to curve fit stuff and say this is a trading edge, because it's not. But if ChatGPT is saying there's a correlation here, there was a statistical. See, this is why I'm a trader, not a statistician, because I can't even say the word statistics. There's a statistical edge in doing this, or there has been. If you consider that the regime is the same, then you might layer that in and say, you know what, I see a long trigger, it's at 3:05. I know that historically that's been a good time to buy, and I've not done any work for that. I've just dragged in my CSV file from TradingView, I've asked it questions, and it's given me this. Now, you can get into what's called over optimizing, and those of you who kind of trade mechanical systems will know this. You're curve fitting based on previous data. And so I asked it, I said, are we over optimizing here? Because I was asking for different time periods, and it gave me a bit of a longer answer. It basically said, you're close to the edge of over optimization, but not quite over it yet. I was like, fine, because you can curve fit and go, well, if I'd gone along on CPI and it's a full moon and I had this, and then it goes, yeah, actually you'd have made $1 million. You're like, yeah, well, so you got to be careful. But again, use ChatGPT as a kind of a really, really well qualified analyst, statistician, data digger Data digger? Imagine that advertising. I need a data digger for my quant fund. You get the idea. So you can just ask it, and that's the beautiful, honestly, so good. Now it's loaded in, that data. You can be out and about and go, hang on a second, what about if how often do we roll back off that noon high? Or how often is power hour genuinely a power hour? Or how often do we tag VWAP? You can just come up with these ideas on your phone. You can then ask that conversation and it will go and do it. Now, you have to check it, you have to test it. Of course you do, but it changes the game, guys. Honestly, it changes the game so much. It makes life so much easier. Now, here's where I think you've got to be careful. Don't track crap junk data. There's people who are tracking stuff. Again, personal opinion here. I don't think there's any value in tracking stuff like how many green candles in a row, red candles in a row. I don't think it's worth anything. I think if you were going to do that, it'd be more important to say percentage move before a pullback or something. So be smart about what you're asking it, because you can come up with stuff and you go, oh, we've only ever had 6 candles in a row, and you're shorting it after the 6th, and it does 8. You're like, well, hang on a second, because it's only moved a small amount. So be smart about things. Focus on things like time of day. I'm going to give you kind of lists at the end of some questions you might be able to help for your trading. Focus on like time of day for highs and lows. Questions I've asked are, what's the typical rotation after this type of move? Opening range behavior, I've shared some of that, 15-minute, 30-minute, 60-minute. How often do we kind of break out, of a large opening range? If the prior day was a wide range, what's just so many questions. And the beautiful thing is, you must have these questions in your mind. You often think that now you can just get them answered. And it's a game changer, because before you'd go, well, is it worth me doing the research into that? Is it worth me hiring someone? Is it worth me learning how to do this? Am I going to get much from it? Yeah, maybe. Now, some answers might be yes. Most of the time it's no. And it's better at my edge just focus on my discretionary trading, my judgment, reading price action, getting better entries, getting more size of my better plays. I need to stay in my lane and stay focused. Now you don't need to. Now you can add that layer in very easily. Okay, so some other things that you can track, which is tendencies. And again, this is not an indicator. This is your market, whether you trade cable, gold, crude, NQ, whatever it might be, knowing how it behaves or how it has behaved historically. And by the way, for those of you thinking, well, that doesn't mean it's going to behave like that now, you're right, it doesn't. But bear in mind that all the algorithms, many of the algorithms, and I'm an absolute nerd on this, I read PDFs and all sorts of stuff for the companies providing these, if you can get hold of them. They look at historical volume, they look at historical price movement to train these algos. So when they're slicing up orders, when they're doing this, they look at history and then they use that as a framework to build their algo. So and there is an implied volatility there of like how much do we expect the price to move based on if there's earnings coming up, et cetera, if there's NFP, but then look at history and go, what's the typical move? And that's another thing that I've done some research on, you might like as well. Hey, what's the typical move in the first 1 minute after NFP or CPI? Range is X. Well, if you fancy a bit of risk, why don't you bracket the order on that typical move? There's all sorts of things you can play around with. Anyway, going off a tangent. So you're looking for these tendencies, right? You're looking to layer in edge. When does the market make high or low? Mention that. What percentage of days test yesterday's high and low? That's a very simple thing to find out. And so how would you use that? If you're long and it's rolling back up to the prior day's high and you think you want to close it, you're like, you know what, I'm going to hold this thing because the chance of it tagging that is 75% based on history. The market regime looks the same. Hold the damn thing. Wait for a little bit more. So it helps the psychology as well. What happens late in the day, and you can see a few other things I put in there. Ask broad questions. This is how I found it to be useful. Ask broad questions, get interesting answers, then dig a little bit deeper, then verify. So get your historical chart data, very easy from TradingView. I think you can download it elsewhere as well, but it's readily available. Export to CSV, drag it into ChatGPT, and then start asking us questions relative to your style. That's the important thing. If you're a scalper, maybe you want to say, okay, and by the way, if you like indicators, fine, it will download that indicator with it. So if you have a stochastic on there, you have a Bollinger Band, you have an RSI, CCI, MACD, whatever it may be, and you have a thesis, you have an idea, you can say things like, hey, How often does price bounce when we have an oversold stochastic on a 1 minute and we're below the prior low? Whatever it might be. Again, don't get too curve fitting, but all those still things you've thought about, now you can test literally like that. It's the power is so good, and you get these trade ideas from it. So let's recap this quickly. Use study what actually happens. So you're a trader, you're in front of the screen, you're observing. Take notes through the day. Take ideas, how often, and think about what would be useful to you. It's all very well me sitting here and saying, hey, this will be useful, but that's to me. That's the way I trade. And I'm a big believer you find your own pathway, your own methodology. You should say, hey, that's important to me. If I knew that, I would probably be better at avoiding those trades where I get caught out trading against the trend, or I'd be better off getting caught out, or I'd hold my trades longer. And that helps the psychology aspect as well. So, you start to study, you make notes, and then you use AI, ChatGPT, to save you time and get some clarity on actually what has happened historically. And then you kind of add that tendency into maybe a setup, and you say, actually, you know what? Very often we're rallying the 3 to 330. If I do see some momentum, I see a little bull flag, I see a reversal, I'm on it, because historically it's a great time to buy, and actually I'm adding a layer of discretion into it, a layer of price action reading into it as well. And this helps you kind of map out the market that you trade. So something that you could do, and honestly, I think it's worth doing. I often do webinars and, I say this setup and do this and do that. But this applies to anybody, whatever you trade, scalper, day trader, swing trader, any market. This stuff is worth digging at, digging in, digging on, digging down, digging into, looking at. You know what I'm talking about. This is worth spending some time. It doesn't take a lot of time, I promise you, and it's worth doing. And I never say this type of stuff. I never say, you should be digging into VWAP and stuff just because I use it and I use a tick index. So it doesn't mean that you should. But I think that whatever you trade, however you trade, this is so worth exploring and finding your own path with this. So start with the main market you trade, study the data that matters to you, and kind of then dig into it. And I promise you, once you start the ball rolling, you'll be like, wow, I'm really starting to see some color. How can I layer it in? How can I improve my trading? Because let me tell you this final thing, guys. Other traders are doing it, and you need to, the minimum, keep up with other traders. And you think about all the new guys coming in. They're just doing this. They're reading the old books. They're going, I'm going to trade like this. I'm going to do this and do that. And they're going to get killed. And then you're going to get even more killed. Now, if you're armed with experience and you're armed with your own research team, statistics team, so can't say the damn word, you're going to be way ahead of the curve. So it's not only bringing that gap between the kind of new traders who are just literally cannon fodder and the more experienced traders, but to keep up with the experienced traders too. So it's worth kind of doing this. It's really worth exploring, because you don't want to be left behind and you want to be ahead of the curve, because actually what's going to happen is it's going to really, really accelerate, and you want to be, I think I said this before, like, if you're filtering onto the, M6, right, as a motorway in UK, if you guys are from Europe, but big, main thoroughfare from north to south, fast motorway, multiple lanes. You don't want to be filtering on that at 30 miles an hour. You're going to get wiped out. You want to be foot flat down, filtering at a decent speed. That's how I see AI at the moment. We want to be at least up to speed, so that when we have these massive breakthroughs and it's linking to your trading account, it's linking to the market, and it's coming up with these kind of things, you start to say, hang on a second, historically I've done better at this. Historically the market's done this. This is a trade I should be taking, shouldn't be taking. I'm excited for the future, because I think it's going to, if you're a trader who has edge, it's going to enhance it massively. But we've just got to make sure that we're, stay ahead of the curve, keep using it, keep exploring it, and play around with it. All right, let's take some questions, guys. I want to thank, obviously, I don't thank them enough, but Pepperstone for partnering with me on these webinars. That allows me to kind of talk about stuff like, AI, ChatGPT, things that I think are going to move the needle for you, things that I think are important as a trader in 2025, going into Q3, on the front line, cutting edge. Like, this is the world we live in now. So yeah, so thanks Pepperstone for allowing this type of stuff. Okay, I think you can guys see the Q&A. There's a few hands raised. Stick your questions in the Q&A, Simon and Jose, if you have one. and I will get to it if I can. Okay, there's a couple rolling in. Bob, couldn't you do a monthly open range using the first day of the month today to get a stronger pattern, and therefore will be a large month and therefore expected a lot of large days for your day trading? That sounds like a great idea, Bob. Yeah, absolutely. You could use that and say, hey, is there a tendency here? And you can use it kind of for seasonalities as well. Like, hang on a second, is the start of Q3 often a wide range? If it's a wide range, am I expecting wider? If it is, do I expect kind of bigger ranges? So I adjust myself? Absolutely. And that's the sort of thing you've thought of that, and now you can explore it. And you go, you know what? I think that there's a tendency there, and that would help me with my trading because I'd be able to anticipate a larger day, hold my trade longer, look for kind of momentum ignitions, range expansions, volatility expansion type trades a little bit longer than I normally would because of my monthly thesis. Absolutely, man. You can do this. And the beautiful thing is you just adjust your candle size on TradingView and you just download it from there. Okay. Jose says, I try to download the CSV. When I drop it into the AI, it says it can't read it. Jose, are you on the plus version? I don't know. I think you could do it with the free, if I'm honest. But ChatGPT is very, very good at cleaning up the data as well. So I would just try again. I've very rarely have a problem with it. You download it, you stick it in. Is it in a different format? Maybe are you using TradingView? Don't know. For me, again, I'm not a massive tech guy at all. I know my way around stuff and I can do things, and it's been fine for me. Maybe there you go. Anthony Valone has said, make sure time format is correct. I prefer using ISO. Yeah, that's a good thing, Anthony. When you download it from TradingView, you can select Unix or ISO. To be honest, I just slap it in as it is. But before, you used to have to use ISO. Jose is saying I'm on Plus, but from Gemini. I don't know about Gemini, pal. I don't know whether it's the same thing or whether it needs some tweaking or adjusting. Try the free version of ChatGPT and throw it in and see. That could work for you. Again, I don't know. I don't know the differences in these different LLMs. Okay, Gary says, thanks, Mark. I need at least experiment. I need to start at least experimenting with ChatGPT. Gary, please do, mate. Honestly, I know you come here regularly. You're asking great questions. You're missing out. I promise you. This is, however you choose to use it. It might just be that you use it for little things, but it is it's a game changer. It's an absolute game changer. Journaling, statistics like this, running through your setups, ideas, and it's just getting better and better. And honestly, once you start using it, you will not go back. I never say, very rarely I say this type of stuff because I'm never going to tell another man how to trade, how to risk capital, if you should risk capital, this type of stuff. But I think this is the one thing, and it's so accessible now that it's an absolute breakthrough. It's a game changer. So here's some homework for you, a task for you, Gary. You'll probably be on the next webinar, I'm sure. By then, report back and say, you know what, Mark, I've downloaded it, I've played around with it, I didn't like it, I stuck with it. Actually, I found it quite useful. I think you'll find that. It does take a little bit of getting used to. I'm not going to lie to you. It takes a while to kind of get comfortable with it, but it's well worth doing. Okay. Beth says, thank you so much for the useful webinar. You're very welcome, Beth. Thank you for coming, as always. George says, agree with you, need to check the accuracy on output ChatGPT gives. Yeah, it can, absolutely. At the moment, it can give errors. They're fewer than they were before, and it can make some silly mistakes, which is why if you find something interesting, just double check it. That's why I built a tool for the time. I got this tool for time-based trading that I test and go, hey, ChatGPT says that's the strongest hour. Fine, I think it is. Let me just chuck it into my tool, or go and manually check a few pieces of data. Before, I used to check and make sure the data was ingested correctly, but you must check it. It's not foolproof, and sometimes it can do some stupid things. Like I think I asked it to play rock. It might have changed. I'm pretty sure it's changed now. It's come on loads, but you could ask it to play rock paper scissors. You go first, and it would go rock. And you just go, all right. You kind of you can't play rock paper scissors, obviously, with someone going first. But yeah, as you say, George, it can make some mistakes, but it's an absolute game changer. Agreed. Okay. Bob says there's a super old video of you on some YouTube video teaching level 2 like at least 15 years ago. You know what, Bob? It probably is, because tape reading was the first massive edge I had, and I was like, no one's doing this. And I remember speaking to some traders, and they were like, hey, why don't you just can you show what you're looking at? And yeah, so you may well find something many years ago where I just wanted to share with some traders about reading level 2, because it was a huge edge back then. I think my opinion has probably changed on stuff a little bit more now, but cheers, Bob. Rob says, I'm going to use it for liquidity and volatility, momentum during the day, and try to avoid the gaps. Yeah, good one, Bob. You know, I think the thing to do is to really work out what you want to use it for. Do you want to work it to kind of look at the probability of gaps being filled, not being filled? Is that based on the size of the gap? Is that based on the position of the gap? You know, if there's liquidity is an issue for you, it's like, okay, how does volume play a part in maybe momentum moves, or what's the typical volume on it? Whatever it might be, you can go down the rabbit hole that you wish. I think that's everybody. Okay, next week, ladies and gents, we have a good one for you. Multi-playbook method, combining trend, mean reversion, scalping into one system to, you know, hopefully kind of inoculate yourself a little bit from the market regime shifts, which I think will be very apt as we come into this new quarter with lots of stuff going on. Okay, we'll call it a day there. Thank you so much for your time. I know it's valuable. I appreciate it. It's nice to have some feedback and ask some questions in here. We'll see you again next week. Keep the risk managed. Enjoy the rest of the week. Take care. Bye-bye.